Hey YouTube, back with another video today, and today I wanted to talk to you guys about some interesting things that are happening right now. It is February 12th, and what is going on in the market currently today. So currently we've had a little bit of an interesting week. I think this was an interesting turning point in a while because we had a drop and we had another drop, and now we had a bit of a pump up today, and stock markets, people are starting to dip their toes back in, and what that kind of means for you and what I think a lot of people should do with their investment decisions. Currently we live in an interesting time where we have a fiat currency. Our money is kind of like one of those things that's not really backed by anything, but and it depreciates in value every year. So what do you do to kind of combat that and get yourself in a financial situation so that you can start making money years down the road and keep your wealth? And I think the biggest thing that is happening right now is what's going on. A lot of people are selling out. They've made a lot of their returns and they're finally pulling back, and they're seeing this is kind of maybe like a scary time. We have some computers doing some advances there where they're doing their own automatic selling and just creates, like, within the instant button, you could just sell off. And I think a lot of people got scared. I had some cash sitting on the side just so that I could buy into a little bit of the dip. And I saw some evaluation in stocks where their P ratios were really low after the dip, and it was just good time to buy some steady stocks that are probably going to go up year over year. They have good growth, they have a really good balance sheet. So watch out for those kind of things. We might end up with a little bit more of a fluctuating market. I said dip a toe in, but don't go FOMO. So what I mean by that is, like, maybe you buy some stocks that you think that might be a little bit of a better value now. An Apple could be like one of those stocks, though I'm not sure exactly where the direction of the company is going. So with that being said, you need to really evaluate where a company is going. If you think it's going to have future growth, I think that Apple is kind of beat down by this market. Its P ratio is 14. It's not super cheap, but it's definitely cheaper than some of the other stuff that's in the market right now, with some of their P ratios just out of control. And I think that's something that you should really think about too. When a market hits a decline, and eventually it will, eventually we're going to end up with a bear market again. And I think if we end up with a financial situation that happened back in 2008, it's going to, like, not even be close to how bad that will it will be in the future. People need to prepare for those kind of things. They need to have cash sitting on the side, so when that happens, they'll have, like, great buy-in opportunities, and they'll be able to buy things for, like, pennies on the dollar kind of deal. I want you guys to be prepared for that. I want you to be having that kind of currency, and I also think that you should also have some silver and gold sitting on the side as well, just in case, because those are a type of currency that is not a fiat like currency. Keeping something on the side as an emergency fund, I think, is something that's very important to have as an individual, as somebody who's trying to build wealth for themselves. So, and building wealth takes time. A lot of people will be like, subscribe to my channel, I'll teach you how to build wealth, like, super quick, do all these kind of things that, oh, do all this and do that and do this. And the truth is, a lot of people, it's risk to reward. You need to kind of think about those kind of risk to rewards situation when you buy and purchase a stock. If a stock is, like, priced price to earnings is like 100 to 200 times what its earnings is, in a financial collapse or a financial problem, you're going to end up with a situation where that stock's valuation is going to sink, and it's going to sink really bad because it's finally going to move back down into normal range. Doesn't mean that those stocks are bad investments to invest in, because a lot of investors are pumping up those kind of stocks. But I want you to be prepared. Have some of your losers, I think, now. Kind of like one of those stocks that are not necessarily the best in this economic time, but still has growth year over year, and those are really kind of hard stocks to find that are going to get year over year growth, hasn't been really necessarily the most profitable right now, and with a PE ratio that's really low and a booming economy, those are like really hard ones to find that's not overvaluated. So that creates a little bit of a buying opportunity when things take a dip. And that's why I think when things take a dip, you do a little bit, you dip your feet in the water, but you don't go fully in. What we might end up with is some more fluctuations in the market coming up here pretty soon. A lot of people are going to, we're just going to have a lot of volatility until we find where things are going to level out, and they'll either go up or they'll go back down. And I don't think that things are going to go back down just yet. We still, I think, have a little bit more time, maybe 1 to 2 years, and then I think we're going to end up with something that's going to be major, and it's going to be probably, I think, the debt bubble. And a lot of people aren't really talking about this, but I think it's going to be bad, and when it pops, I think it's going to go straight down, and it's going to be like the quickest bear market you've ever seen ever, and it's going to be brutal. But if you're prepared for it, it's a really good buying opportunity for you. If you have some money set aside, then why do you care? You have all this cash set aside, you buy in, you scoop up stocks that on way cheaper than they are right now, and then you just grin wickedly because typically, well, the US economy always recovers. It might take you a long time, but that's delayed gratification. And to build wealth, I think you have to have delayed gratification. You have to be patient. And patience is a really hard thing for my generation. But if you can do it, guys, and I know you can, if you can do it, anyone can. So, and to be rich, it takes some sacrifices. You need to build a business, you need to work really hard, you need to find extra money somehow. Because if you don't have any extra income and if you're just breaking even every month, if you're not lowering your expenses, then you're just going to keep going in the same direction every single day. And I don't want that to happen for you guys. I want you to be successful. I want you to wake up with a smile on your face and be like, man, today's a great day. It's a building opportunity for myself, and it's an earning opportunity for my finance and moving forward. And I want you to take it one day at a time, one step at a time. And I see everyone that's just like, oh, I just want to just jump to the top of the mountain. And that's just not how it works. We don't have that kind of situation unless you get really lucky. Say you invested in Bitcoin, you threw $300 in it back then. I don't know anyone that did that. And if I did, I wouldn't believe it. I had a couple of my friends had some Bitcoins, but they didn't make $100 million that somebody was like, oh yeah, I'll throw $300 in there. I didn't end up with that situation. And maybe somebody did, and maybe they made a lot of money, but they got lucky. And that's just the truth. Not everything's going to be like that. Not everything's going to have that kind of return. And I want you guys to take a step back and just realize that, you need to be prepared, and you need to be prepared for a bad situation. I'm not saying it's happening right now. I'm not very bearish. I'm bullish for this year. I'm bullish maybe a little bit for next year, but after that, who knows? And I just want you guys to be prepared financially. I think you should have money sitting in the bank, and a lot of people don't have any money sitting in the bank or have any money on the sidelines. And also, keep in mind, it might not be smart to also keep your money in the bank too, because sometimes when things get really bad, you end up having to do a bank rush, and no one can get out their money because banks loan out your money as soon as you put it in. Say I took $1,000 and I put it in the bank. They can loan out $900 or $1,000 to somebody else so that they can make an investment or buy a home, and that money is it just keeps on going and going and going, but it's not backed by anything. And I want you guys to be prepared for something that's going to happen, and I think in my lifetime, and it might take a few years, it might take a long time, who knows? But being prepared for those kind of situations are really important, because if you're not, you're just kind of, caught with your pants down. I want you guys to be caught with your pants down. Be prepared for what's to come. I'm not a doomsayer. I want you guys to be really, really ready for the time where it's when stocks really take a really big turn for the worst. Then you have all this money sitting on the sidelines. You can jump in. I always like to say, look at what people are doing, not what they're saying. You know, I really like Warren Buffett. I think he's one of those guys that's like, yep, I'm going to keep all this money on the sideline and I'm going to wait. Because that's what he's doing. He's like, yeah, I'd like to buy. And he's like talking about, yeah, I'm buying some stocks. But I think that he's not doing really any big money moves right now because he's a smart guy. And he's waiting. He's waiting for the right time to strike. And the right time to strike is when things get really nasty in the stock market, like 2008 nasty. And then he steps in with all this cash and he starts gobbling up all these massive shares in all these companies. And then, you know, 10, 20, 30 years down the road, he's looking pretty sweet in his chair. And I want you guys to be prepared for that so that when that time happens, when that striking ability happens, you're prepared for the drop. And then 10 to 20 years, you're sitting on a beach in Hawaii and drinking a Mai Tai, you know. So like if you like this video, dislike if you dislike the video, and interested in my channel, thank you very much and have a great week.